Let me start with a question then about the broad markets and the clues that you're looking for as to whether we've substantially priced in all of the downside from coronavirus. Is it possible to say that at all yet, Henrik, or do we suffer further bouts of negativity?
Unfortunately, I think it's pretty clear that there's potentially more downside to come. It's obviously great to see the markets opening up in a positive way this morning, but I think this has much further to run. We're only at the beginning of the social isolation in Europe and the US, and the effects on the real economy are still to be felt. So, while there has been a big valuation adjustment, and it's possible that it's kind of a fair adjustment at this point, but obviously the real effects on individual companies are still only going to be found out over the next couple of quarters.
How bad do you expect it to be, Henrik? We've been talking this morning about, the people who need it most are probably going to find it difficult to get assistance. If you work at a restaurant, if you're a bartender, if you're a personal trainer, a lot of those people are just going to be out money and looking for the rent. Plus, you've got Virgin saying they want their employees to take 8 weeks unpaid leave. Now we got Volkswagen saying it's going to halt factories. I mean, this is the biggest car maker in the world. It's going to stop making cars in Spain, Portugal, Slovakia, Italy. What kind of effect, or how bad is the effect of these sudden stops on the economy?
Two questions there. First of all, you still have a technical unwind to come, as investors and individuals are raising cash, selling ETFs and UCITS funds, credit and equity in order to just hoard cash to survive the downturn. So that is something that will play out throughout the markets, particularly in the credit markets. And then, you raise a very good point about the real economy and how difficult it is for central banks to reach into the people that actually need help. Because unlike the great financial crisis, this is not a banking crisis per se. Loan loss provisions will take many quarters to come in to threaten bank capitalization. The difficulty that policymakers are struggling with is how do we help those individuals? And we're going to have to be in unconventional territory, whether that's helicopter money or different forms of assistance, because as you can tell from the market reaction to the monetary policies that have been announced so far, which I think we all can agree are substantial and all heading in the right direction. But how do you fix that last transmission mechanism from financial institutions into individuals?